and welcome to Finding Your Mojo, a fireside chat with Peter McGuire, CEO, XM Australia. Peter, hi, it's always such a pleasure to have you on the show. I want to talk to you about something a little different from what we usually talk to you about. And this time around, it's about youngsters finding their financial freedom and how millennials should be planning for retiring in their early 40s.
Well, I think that's interesting, that last little point, Samina, and it's lovely to join you from Sydney, Australia. So they're planning, let me get this straight, they've got a 20-year time horizon as far as work, and they're planning on retiring in their 40s, or they're planning on retiring, after 40 years of work. Let me get that straight.
I think retiring after 40 years would be an idealistic situation, but no, they want to retire in 20 years. Expectation is sort of, spiked.
Yeah, well, their expectation has spiked. Well, I applaud their entrepreneurship, and I applaud their vision and their enthusiasm, and I hopefully that they succeed in that. Well, you've got to do a lot of things right to retire in 40 years, depending upon how much capital you want to retire with and the quality of life. But I'm going to say that if someone's 20 today and they're part of the Indian subculture of travel, nice food, good quality of life, you'd want to make a fair bit of bang for your buck over the next 20 years to be able to fulfill that and live well into your 80s or 90s without having to work. And that would be I think that is very, very
idealistic.
Yeah, mate, well, I'm not going to say that. I'm just trying to come up with the right word. But that's, I've got to say they're fortuitous, and maybe that is what they're after, is a bit of good luck as well.
Right. So I guess keep your expectations realistic. But Peter, let's talk about asset classes, right? So when most people are planning for their long-term goals, equities usually ranks quite high up in terms of high-yielding assets for the long term. Do you agree? Do you think that is an asset class one needs to bet on if you're looking at a long-term goal such as retirement?
Well, I think so. I mean, they've been wonderful over the last 110, 120 years, but I've just got to say, depending upon your timing, if you were asking me this last year and I said, oh, look, I think it's onward and upward, you could have traded on really any component of the Dow, as long as it wasn't tourism, but the broader market, and it's just been absolutely outstanding over the last year. So there are some sectors of the market that have been, hemorrhaged. Have a look at, cruise lines. Have a look at oil companies. Have a look at, hotels and airlines. So if you get the sector right, healthcare, and a number of others, I think you've got to look at that as a wise strategy for long-term growth, Samina.
Right, Peter. I want you to look a little more away from the US equity markets to Indian equity markets. And I know we've not performed half as well as the Dow, for example, or China. Of course, there's a clear change of focus from China to India now, or amongst the emerging markets. But how do you advise youngsters to access these international markets? Should they be looking at the US equity market, or is the Indian equity market good enough for now?
I think that if they've got first off, I think it's a far wiser and smarter market for a 20-something today than it was 20 years ago or 40 years ago, quite simply because of the advent of technology and that entrepreneurial culture that's very much embedded into India. So there's the first part. So it's why not look at global markets, because they think globally. They look at where do you go to school, or if you go to US, if you're fortunate enough that you've got family members that could be in Europe or could be in the US. So they've got that unblinkered approach. So there's the first part. The second part is, whilst India may not have moved, I still believe that their decade is very much now, and it will be and will continue to be over the next 15, 20 years, quite simply because population growth, that India's going to come up that curve very, very quickly, and that's been very evident over the last couple of decades. And my mind going back to when I was backpacking and I came through Bombay in 1979 to what it is, when I was there only a couple of years ago speaking with you at that it's changed so incredibly that I feel as though that those changes are only going to be magnified on every frontier, from subways to roadways to technology to healthcare, you name it. That's where India is going to come up the curve very quickly. And from an investment standpoint, I think a lot of people would do very well out of backing those particular industries.
Right. Well, so I guess the future is looking quite bright for Indian equity markets.
It is.
But Peter, also I want to talk about other opportunities, right? So on one hand, you have equities locally, which are fairly accessible to all of us. And of course, under the LRS, Indians can now invest $250,000 a year, a person, into the international market. So that opportunity also still exists. I want to talk to you about something like GameStop. That was the biggest story this year. And I do believe a lot of young people, mostly outside India, made big money on this one. How do you think Indians can access such opportunities? Do you think a geographical location could potentially play spoil sport? Or also, more importantly, do you think this was just a stroke of luck, or opportunities like this could come up more often in the near future?
From what I read of it, and from what I understood, we understand that many of the hedge funds were shorting. It was through technology, the retail traders became very much aware of an opportunity. We understood that they ramped the stock up. There were issues at play as far as I understand the SEC. And will those opportunities present themselves again? I certainly wouldn't be surprised that they do. I believe they will. And I believe they will for a number of reasons. First off, as the world becomes far more engaged, that technology allows them to appreciate the transference of information instantly, that those big herds of investors are able to move as a pack versus singularly. So there's the first part. Think of that, Samina. That would never have happened 10 years ago, 5 years ago. That technology, I don't believe, was there at that point. Now, you've got people that are highly engaged, highly educated, understand, they've worked for hedge funds, they've seen them short, and they go, well, if we did this, we could absolutely lock them out because it'd be a short squeeze. And though that methodology, I feel, will only become more evident and more herd-like as each month and year roll on from here.
Fair point. Also, talking about other alternative sort of asset classes, right? You want to share some thoughts about crypto? I mean, Bitcoin it's become almost a necessity, at least when you're having a round table with dinner conversation these days, right? What are your thoughts? Is that a rally which is going to be short-lived, or could that sort of generate large or big alpha in the near term, or the medium term for that matter?
Well, it's had a tremendous run up, and I haven't checked on it in the last 8 to 10 hours. But it's been one-way traffic, over the, let's say, the last 6 to 12 months. It's been very, very strongly bid up. Is there further upside? I could have egg all over my face, and we're sitting at 150,000 at Christmas, and you say, Pete, why didn't you, you said it's going to be, sideways. I think there are many, many components of the global economy yet to play out due to the COVID issues, and even your numbers today, Samina, I'm noticing 300,000 cases today, are the largest in history. So I feel that 21, whilst we've got through the first 3.5 months and we're dusting ourselves off after 20, 21 has got a long way to run yet, and there's still a lot of uncertainty as far as economic growth, what's happening as far as inflation, where does crypto play, does it have, you see it wash out 15% in a matter of a couple of days. Is that going to be those big volatility swings? I still sit here and I go, who's controlling it? Can it be manipulated? And what's the big, the strategy? And I still think, I shake my head in some ways. Maybe I'm too old school. I just want to see the rest of 21 play out, because I feel as though that there's many moving parts that are on a global geopolitical scene that are very quiet at the moment, and I feel as though that they could create much turbulence as each month rolls on.
So I think cautious, that's probably the best way to look at this asset class. Let's not get carried away for now, right?
Yeah, well, it's had a big run up. Just don't bet with your head and not with pure emotion.
Yeah.
And trade that way. I think you've got to be fairly prudent. Yes, whilst it's important to have a component of crypto probably in an asset class or in your portfolio, don't be, over enthusiastic, because, you can be left there, scratching your head going, it all turns to, in a basket. So at the moment, I just say, be very wary, understand the dynamics at play, and let's see how the rest of 21 plays. Slowly, maybe look at your positions and slowly increase, but don't go all out.
Right. Talking about emotions, right? Let's talk about gold, an asset class that decades and decades on, we still love and adore. Give me a financial reason beyond emotion and cultural on your thoughts on gold. Is it an asset class that should still find a place amongst Indians or even internationally for that matter? And of course, what's the outlook?
Well, I think yes, it should. And if you look at this month alone, it's up $110 since the 31st of March. So that's not a bad gain in 3 short weeks. Second point is what's happening as far as US dollar and inflation. I said on TV the other day to one of the networks, if you can tell me that inflation's running at 1 to 2%, then I must be shopping or doing everything wrong, because nothing I know goes up 1 or 2%. Everything's up 10% in Australia. Food's up, fuel prices are up, you name it, everything's up. Base metals for plumbers, restaurants. So if inflation is, and inflation I think is galloping away. So I think that's going to be a good news story for gold. Where does gold end up? Again, that plays in some ways to the crypto story. I think they're going to be pretty much in lockstep, and it's been a wonderful asset class over the last 10 years, 20 years, that as we're approaching that $1,800 level. I feel as though that there's more upside, and I won't be surprised to see around a 2,000 or 2,000 plus handle by the end of the year. So there's the first part. The second part is I think it's a good asset class for the longer term. And whilst all of that plays itself out, I really feel that, the momentum and the uncertainty with COVID is going to be a strong wind in its sails.
Right, so it will be uncertain, it will be volatile, but fair to say that you prefer gold to Bitcoin if individuals or youngsters want exposure to alternative asset classes, right?
Well, I think so. I think it'd be good to have both. It's certainly don't dismiss gold. I still remember, in the 86, 87, gold sitting at $320 an ounce, $310 an ounce. Well, here you are 35 years later, and if you're looking at historical, it's up hugely. Let's not kid ourselves where gold was in 71. Let's put our mind back to, the big spikes. If inflation's taking off, record low interest rates, and don't forget the stimulus that's fed the world over the last 12 months, there's got to be a judgment day, and all these components, I think, sing strongly for the gold story, Samina.
Oh, wow, that's so good to hear. Peter, also, we only have a few minutes to go, but if you can just help us or help our viewers sort of make sense of all the noise. Tell me, what advice do you have for youngsters who obviously have a fairly high risk profile? Because now we are talking about wanting to retire in 20 years. You can't possibly have moderate risk appetite and make big gains. So I'm going with the assumption that their risk profile is risk-taking ability is fairly high. What sort of a portfolio would you be recommending? And in terms of preferences, your most favored asset class starting at the top?
Well, they've got to look at technology because they're technology savvy. They were born in a technology era. They understand technology incredibly well, and it's part of their whole ecosystem. So you would have to think someone like Ambani, following what his course of events are and looking at these, huge Indian conglomerates that participate on global networks. So there's the first part, technology and all of those linkages from technology. Are they chips? Are they, you run your mind across them. You guys, when I say you guys, the Indians have got incredible linkages to Silicon Valley. All of the big conglomerates of the world, a lot of them are run by Indians themselves. So I think you've got to back those people. And there's your first point, because secondly, once you've identified the industry and the potential, these companies have had extraordinary growth over the last 15, 20, 25 years. And I feel as though that their good times are going to even be more magnified due to population boost or population boom over the next 20 years. And that whole generation becoming far more engaged from, a mobile phone to differing styles of technology and innovation that allow more opportunity to support through being a stockholder.
So tech is the big one that you're betting on. Also, just quickly beyond that, any sort of advice? People are looking to become entrepreneurs, and if you look at the top 100 wealthiest people in the world, I think that list is majorly dominated by entrepreneurs. Is that something that you advise? Because while the fire is there, you got to be a little more conscious of your financial status before you jump into a new venture. And debt, I'm assuming,
yeah, but the fortune favors the brave, Samina. And as well as anyone, you've interviewed enough over the years, and you hear these wonderful stories. A couple of years ago, I was sitting at the Taj Palace Hotel having dinner, and on the next table was Mr. Ratan Tata. And I looked and I just smiled and waved, and what a beautiful man, And I look at a guy like that, and you've got to have passion. If you've got passion to life, and entrepreneurs need bucketfuls of passion, because passion is enthusiasm. You can't buy that. I've been to the best business schools in the world. I've Wharton School in Philadelphia, and enthusiasm and knowledge. If you've got the knowledge, you understand, but you need the enthusiasm. You need the heart. You need the drive. You need the determination. And India has that. India has that in buckets. I look at a very proud nation, but they're prepared. You hear these wonderful stories, Ambani family, and one of the profs at the Wharton School was Professor Ian McMillan, and he was the Dhirubhai Ambani Professor of Entrepreneurship and Innovation. So he was an endowed chair by the Ambani family. And when I read his story, Mr. Ambani, not the boys, not Anil and not Mukesh, I talk about Mr. Ambani, their father. It's the most incredible story, and I still believe those opportunities are there. I still believe what I see Mr. Tata sitting at a table and having meetings at 9 o'clock at night. If it's in your blood and you want it bad enough, you can do anything, Samina. You know that as well as I do. You're a mother of 3 children. You instill that in your children. That's what parents do. And if they instill that belief system, you can do whatever you want to do. There is no doubt what you can create. And it only comes down to your vision, your heart, and your belief in yourself. And the more you get beaten, the tougher you become.
That is such an encouraging message out there. And more importantly, if there is the passion, then you don't want to retire at 40, right? You're going to live your passion till you die.
That's what I wanted to make that point, that these young people watching this now, Mr. Tata sitting there, and he was so engaging. I don't know what Mr. Tata's age would have been then. What age is he roughly?
Maybe in his 70s, 80s?
Probably. I'll tell you a quick story, and then I'm sitting on my first trip ever on the A380, Eddie had first class. And I'm flying from Abu Dhabi into Mumbai to probably see you a couple of years ago, probably 4 or 5 years ago working. And I'd come into Mumbai on my way to the OPEC meeting, and I'd work some media and meet up with some friends in Mumbai. And I'm sitting there on the seat at the front row. I was at the marvelous. There were 9 suites on the Etihad A380 first class. And there's a gentleman behind me. And I look over and I said, good afternoon. He said, oh, hello, how are you? I said, oh, very well, thank you. I said, my name's Peter McGuire. What's your name? And he was an Indian gentleman. And I said, where have you been? He said, I've just come from San Francisco. I said, really? He said, I flew from San Francisco to Abu Dhabi. And then I have to change planes and jump on. So he's flown first class. And I said, what did you do there? And he said, oh, I've got business over there. I said, how old are you? I said, you're remarkable. I said, you're like a 30-year-old. And he laughed. He said, I'm 93. So he's a technocrat. He's been involved in Silicon Valley. He's an Indian entrepreneur. And I'm not going to say his name because it's not fair to him, but he's truly a legend of India. And here he is at 93. So don't worry about these people wanting to retire at 40. Work till you drop, and you're going to be a very successful and happy person. And there's that man. I hope he's still flying today at 96.
I'm sure he is. Of course, there is a pandemic, so travel is restricted. But nevertheless, great talking to you, Peter. It's always so good to talk to you. But we'll catch up soon. Thank you so much. Thanks for watching.
Thank you very much, Samina. Lovely to join you. Take care. Bye.